Yeah. Yes, I had that as well. I had that earlier, and yeah, but I've just been persevering on it and just appreciate that pound pairs and pretty much everything so far today has just been quite choppy, just a little bit of volume really. So it's been good for scalp moves. You know, it might move 10, 15 pips or so, and then it just stalls, bounces, and maybe goes back. So I've just been, if I get on one of those smaller moves, I've just been taking some profit off it, and then maybe messing around with the stop loss. Yeah, I haven't really been able to do much else, but that's okay. That's been okay. What have we added? We've added about half a percent. Not much in percentage terms, but it's it's enough. So it's been all right. Just waiting for everyone else to join. There we go. Yeah. So let's talk about this momentum strategy. Let's focus on this pound pair because I have I have not to admit some more people. I've used the momentum strategy on it over the last few days. I've used the 76.4. I've used the divergence. It's kind of nice when you're able to use all of your strategies on one trading opportunity. Um, that helps to provide extra added confluence. So when you're looking for an excuse to get into a trade and to justify it, if you've seen the potential setting up several times over a period of like 2 or 3 days, and you're able to apply your strategy, like the first strategy, and then apply the second strategy, and then the third strategy, it's quite cool. It's quite good. Um, so yeah, that's why my strategies are designed in such a way that they are able to be, you can work them together. They can work in harmony, and create like a hybrid strategy. So people were asking me over the last few days and few nights, can we kind of go over it? So I've got a message here today. It says, may I ask you why we should short GU after price broke 13580? Yes, explaining it now live. So yeah, we'll record. That's cool. No good. Who's logged in? Who's logged into this? Who's logged into this Zoom call under no good? What kind of a name is that? I mean, guys, put a name. Yeah, put something, even if it's a nickname. No good. Don't put negative vibes like that in here either. That's not. It's Novak Goods. No, no good. Okay. All right, that's cool. I swear you're just making that up. Your name's not even Novak, is it? Just that was the first thing that you could think of. So we had a guy we had a guy yesterday, didn't we? The guy that kept posting his charts with the best entries, perfect, and every chart just looked like he'd copied and pasted like some stickers with the stop loss and the entry, just sticking it on his charts. It just looked so suspect. I mean, it looked like on one of them that he just copied and pasted it over on the chart, and so on the left hand side, a bit of it had been cropped because when you're copying and pasting stuff, if you don't do a good job of it, it ends up cropping off or hiding some of the edges. So part of the edge here was kind of cropped because it looked like he put something over it. Well, whatever. Anyway, so I just wanted him to explain it instead of just posting these charts where everyone was then commenting and going, "Wow, it's great," and it's like, well, then he started doing he ran his own webinar yesterday, and he was talking about his mentorship and stuff like that. I just thought, yeah, you're just here to try and sell some stuff. So you just got to be mindful of things like that, really. There's no harm in testing people out and joining their whatever it is they're offering, but always push for a free trial. If they're good at what they do, they should have no problem but to offer free, a free trial, even if it's like a 3-day or a 7-day free trial. Something. It should be a little bit more open to sharing. Right. Okay. Yeah. So let's go over this trade recap, pound dollar, and also we may be able to capitalise on it further today. So let's just move this up a little bit here. There we go. That should work better now. Right. Yeah, scrunch it right up. Don't really need to see the levels as such. You've got to focus on the fibs. So what we've got here with the pound dollar quite quickly is that it went. It swung up here. This is a 4-hour time, just shy of 135. So 135 seems to be a key area. 134.83. And we had this really solid, very pronounced sell-off down to 126.75. So if you were shorting this is a momentum strategy that would be used, and momentum gets used a lot. Basically, momentum is quite simple in it means what it does what it says on the tin. If something is trending, so if a market is trending, that's when it gets used. It can only be used in a trending market. So if it's selling off, you will see various times it will, on like a 1 hour, on a 4 hour, on a daily, they're the trends that you're looking for, or they're the time frames you're looking for a trend. You don't want to be looking at it on a 1 minute time frame. You want to be looking at it at the higher time frames because it's powerful, and you know that, over an hour or 4 hour or daily period, you're going to get a proper move. And you should also be aware that every instrument that you're trading has what they call an average true range, so a daily range. So like if you were trading pound dollar, you know that on average it probably moves about 120 pips or so, about 120 pips a day maybe on average when it's trending. So if you identify that this is moving, and it's moving 120 or so pips on average, and it's moved say 30-40 pips, and it's looking like it's starting to trend, then you can always bear in mind as one of your rules, if you like, or ask the question of yourself and say, okay, this has got scope, it's got room to move, and then start looking for targets and start looking for potential levels that it may look to try and get to, right? So certain things that you should note down in your journal, or note down in part of your trading plan. How much has it moved? Where would be the best entry? And can I get in on this? So like yesterday, I was able to get in on it because I saw that it retraced to the 76.4. We were already about 50 pips late, but understandable that if this was going to go and it was going to give us a decent move, having already moved a fair chunk, I thought, okay, this has got legs to actually move a bit more. So we're going to jump on this. And because our entry was perhaps a little bit late, I'm not going to take massive risk. And so I reduced the percentage. I just thought, okay, I'm going to put a smaller position on. And then if it moves into profit, I'm gonna bank some. And that was the thinking. So I allowed myself to get into the trade rather than sit on the sidelines and be a spectator. And by answering a few simple questions, this is why it's important to have a checklist of what you do each day, a routine, which is, brings me to what I was saying at the weekend when I shared the podcast about consistency. This is about being consistent in how you approach trading, and what is your attitude to risk, and how you manage all of that. And there's so many little questions that you can ask yourself, and it's trial and error, isn't it, for new traders? And give yourself time, because that's the best advice I can give anyone. Just take your time with it, but have these questions and familiarize yourself with a routine and a way that you do things and a way that you approach a setup, so that you can take advantage of a move when it happens and not feel like you're going to miss out. What's the matter?
Lunch is ready now.
Okay, cool. I'll be back soon. Oh, yes. So that's yeah. So hopefully that makes sense. I can help you to create a checklist. I did share these tools within the Telegram group. We can post. I've pinned them actually into my Telegram group, so you can just go to the pin section and there's just scroll through and there's these little help sheets. They're stuff that you can print off and use, like create your own little checklist. So when you're looking at a setup, does it meet your criterias? And that's important. So you have your strategies, and then you need to have like a little checklist on the side that helps you to get into the trade and apply that strategy, because all the strategy is doing is giving you a vehicle to navigate the move. And yeah, that's it really. So when you're done, take a look at dollar yen and see a double top on a 1 hour waiting break resistance. Oh, okay, no worries. So in this case, we've had this big move down. This was a momentum strategy. So every time it went down, we'd wait for little pullbacks, and we would measure the pullbacks using the fibs. That's all we're doing. We get pullbacks, and we would use like a 15-minute time frame or a 5-minute time frame, the smaller time frames to try and find these little pullbacks. And then when it got to the bottom here, for example, we've had this kind of a pullback here, which if I put some fibs on without looking, I could probably guesstimate that that's probably a 38.2 retracement, just to give you some idea of how price action generally moves, right? Generally does it. It's just to, what have I done here? I've done it wrong already. Just to show you price action and what you need to look for. Let's move that over there. Let's get this there. Sorry about that. Let's get rid of that because it's going to. Could zoom in a little bit, please. Yeah, I will do. 2 seconds. Not yet. I don't want you to focus on the price as such. I just want to focus on the theory behind it, the hypothesis, if you like. What we are looking to do when we apply a strategy and how we can understand price action. So we've had this big old drop, for example, and then this is going back to I think September, the start of September. So you plot your fibs, and you'll see a pullback, and it will pull back to something like 38.2, which is what I told you, right? And then it consolidates and it tests this area, and then it drops and completes an N shape. This is a high probability setup. We have the big momentum move, lots of volume down, then it needs to find some support, runs out of steam, then we have a pullback, and then you measure that pullback. And this is what we call the 3 option rule, where we measure a pullback. We want to see what kind of a pullback we get, and this is where we use the fib. So we're going to say it's going to pull back to either 38.2%, or it's going to pull back half of that move, so it's going to retrace 50%, or it's going to retrace 61.8, or it's going to retrace 76.4. Now that's the first option. The second option is going to do a full retracement and do some sort of V pivot and get up to that 100%. And then the third option is that it's going to break that high and make a new high, and then look for the extension levels, so a 127, a 161, etc. So that's how we measure the price action, by applying what we call a three option rule, and that's just monitoring price action. And that's how we use the momentum strategy. So when we're catching a move like this, we want to jump on this trade. We think, well, we might have missed the entry, the best entry. We didn't get in at the top, and that's okay. Don't be afraid to still jump in and take the trade. If you feel that it's still got room to go, you're going to be fine with it. It's about then reducing your risk, calculating where the stop loss should go, and accounting for, if you're going to risk 0.5%, divvy up that 0.5% into the size of your stop loss. So if you have to use a 50 pip stop loss, and you're going to use 0.5%, then it will, you do your calculations, and it's going to give you your lot size, and that's it. Once you do that and you see the lot size, actually do the calculation. You used to be able to use a Steinu app up until yesterday. I went on it last night. I was talking to one of their traders, and all of a sudden they're charging you whatever it is, $14 or something. It's not major, but I didn't see that coming. They didn't seem to announce it. It's just all of a sudden it's no longer free, which I thought was a little bit cheeky. So yeah, momentum. We can keep going over momentum over and over and over and just keep talking about it. It's like you get this movement. Basically, it goes down, it pulls back, it goes down, it pulls back, and that's price action for you, right? So if you're establishing a trend, it's a trending market. You can wait patiently for a pullback. You know that it will find some structure somewhere. It will pull back. Or if you can see some structure that it's coming up to, you can maybe short, in this case, short it to that first bit of support, first bit of structure. And if you think actually this is already on its way, to remedy that or to soothe your anxiety, as it were, just take a smaller position so you still have skin in the game, you know, just so you're not missing out. Because there is that FOMO, there is that element of fear that you're missing out on this move, and I'm sure you all have it. You see a move and you think, damn, I want to get on that, and it's already moving without me, and so you get a little bit anxious and you think, God, and then you jump on it, but you haven't really got a tight plan, and so you jump on it, and then 5 seconds later you're probably jumping out of it after it's moved in your favour like 5 pips. You know, oh, I'll scalp that, and there's no real plan, and you're all over the place, and it's all a bit of a mess. So having some structure is always really important, and that's what we talk about when we refer to consistency. It's not about I've traded 10 trades and I've had 6 winners and 4 losers. It's about your consistency overall as how you're performing as a trader. Are you happy with how you're approaching the markets? Are you happy with how your day is going and how you're structuring yourself to take on this beast of an industry that is not designed for you to win? Have you got the right tools to do it? All I keep seeing is people talking about FTMO, and 90% of you are going to fail that FTMO. You're not going to last 5 minutes in it because you haven't got the right approach and like business acumen, which basically means you have to understand that this is a business, and so you have to treat it with respect and treat it as a business. This is a 4-hour chart on the pound dollar, so we're going to zoom in and talk about the potential for further downsides as we speak now, because the 4 hours is quite a powerful time frame, and you can see from my awesome indicator or awesome oscillator that we have what we call a 3-wave. So as part of our momentum strategy and as part of our divergence strategy, and then I'll show you the 76.4 as well, we have this oscillator, this awesome indicator. It's called a pro storyteller, but the one that's very similar to it, and it pretty much does the same job, is what we call the awesome indicator. So that is worth taking notes on. And I've seen now that quite a few of you have got that awesome indicator at the bottom of your chart to help you gauge momentum. And all that's doing, as you can see here, is identifying the volume. It's tracking the volume that's coming in and out of the market. So generally, the way that this works is that you'll have, on a higher time frame, on a 1 hour, a 4 hour, a daily, a weekly and a monthly, they're the ones to use. They're the time frames to use for all of our let's mute you. Make sure you keep your mics muted unless you have something to say. So what you find is with all of our strategies, we're looking at higher time frames, so 1 hour, 4 hour, daily, weekly, monthly, and you do your top-down analysis. So you start from your month and you go down weekly, daily. Of course, you don't have to look every 5 minutes at your monthly or your weekly, do you? So you look at every day, look at your daily, and then when you're intraday trading, focus on the 4 hour and the 1 hour. And then for entry, we start drilling down to say a 5 minute and a 15 minute to look for some potential sudden burst of volume, which is going to be our momentum that we're after. So with this one, we had divergence, which you can see here, 3-wave divergence. So we had this wave up, and then we had another wave which was a lot lower, and then we had another wave which was just as low. And so we have these yellow lines come up because that's part of my software that just helps me identify automatically that there's divergence. The volume isn't there. Price is pushing up here, but this isn't going anywhere. No, it's automatic, but you can draw one line. This is a bit overkill, but this is my software, and I know people are going to ask me for it, but you can't buy it. It's mine, and yeah, but you can use the awesome indicator, and you can easily see. Just use your eyes and see. Oh look, this is lower than this. Generally, what you'll find with that indicator is, I know people say it's lagging or indicators are lagging, but we're not using it as something that we need to track price action, religiously. It's just something as a reference to give us a reference point to say, you know what, the volume's not there. So we're just really interested in seeing if the volumes are there. I know sometimes you'll see traders with the volume on the side of their chart. So on maybe the right hand side, along the side, or on the left, up here, you'll see people, won't you? You see traders with that volume, and it's going like that along the side. They just choose to have it on there. It's the same thing. This is what this is in a way. It's just have it at the bottom of my chart because I don't want to look fancy. But some guys do have it there as a volume indicator. So they're good to kind of gauge the market, and what you'll find is these bars, you'll have generally 8 to 12, I should say, 8 to 12 of these bars. Let's count, shall we? So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There you go, 12 green bars, and then it suddenly started showing some red. And let's count these ones as well. 1, 2, 3, 4, 5, 6, 8, 10, 12, 14, 16 there. It's quite solid. So that was really, really extending. Run out of time. We've removed the 40-minute time limit on your group meeting. Ah, see? There you go. How generous is that? Yeah, good. Kindness. So we can pass it forward. There we go. So we can show you what we're doing with these strategies and how you can make money off them. Yeah, win-win for everyone. So we're having this go up, and with its 3 waves. So if you had 2 waves, so these are waves. That's cool, and that's quite powerful, and you can see the market reacting to these waves. But when you have a 3 wave or 4 wave, that's solid. That means that it's had its day in the sun to the upside, and it's wave 1, wave 2, wave 3 divergence, 3-wave divergence, very strong. 1, 2, 3. And it's done what we needed it to do. It's gone up to test. It's extended to the 127.2. So you need 127.2 as a fib level on your chart to understand divergence, to appreciate divergence, to to sort of say, okay, this is up here, and we're going to look for a bounce. And what other confluences? Well, $1.37 round number. Another confluence, another reason to get in. Nice round number. Finding some resistance here, divergence here, 3-wave divergence. It's enough of a reason. I don't need more than that. I don't need 10 reasons to get into a trade. I always thought that you needed more reasons to get into a trade, and I guess that depends your attitude to risk. Of course, the more the better, but you have to be careful because it might be analysis paralysis, because you're over analysing it. You're analysing the shit out of this market, out of this chart, that you end up not doing anything. And what I had from also what I've noted, I had a conversation with one of the guys yesterday. I've spoken to him a few times. He shared a lot of stuff with you guys as well because he's doing an FTMO at the moment. He's funded as a trader. He's quite restricted in terms of having simply only one strategy. And so what I find is the other end, the opposite end of what I've just said, the opposite end of that spectrum, is that you might limit yourself a bit too much, and you might actually be too conservative. I don't meet many traders that are that conservative in terms of only trading maybe 6 trades in a month. Generally traders trade more than that. They're a bit more active because the markets are a little bit more active. I could appreciate if it was August and summer holidays and everyone's off and the volume's really light and thin, maybe 6 trades in a month might that makes sense, right? But when the markets are giving what we want it to do, giving up pips and making good moves, and then that's not enough. So yeah, you have to kind of find the balance. So we're here. we've had our first nudge down. We took some profit. It found some support, and then that was Monday. So we made some money there when we called this short with a divergent strategy. Then we had this move up. It's consolidated on the Tuesday and moved up. And guess what? It retraced 76.4% before having another stab down. We took this, didn't we, yesterday? And we just got in and it just went down in our favour pretty instantly. And we made our money as it went and retested previous structure. Again, you don't have to see it in high definition. You all have your own pound dollar charts, I'm sure, and you can all see this on a 4 hour. And if you are following this, so we say pick some instruments to trade, get to know them, have 1, 2 or 3 instruments, learn how they move and understand what sort of range they put in, like average true range, how much they move in a day. Then you can sort of say, should I get on this? How much has it moved? It's only moved 50 pips. Good, it's got another 50 pips at least. If I'm conservative, it's got another 50 pips to the downside. So I'm going to jump on this. I'm going to take a smaller risk as well. I'm going to maybe put 0.5% on it or so. But I'm going to try and milk the rest of that move. And that's what we did. And pretty much sniper entry straight in at 136.09, and it just fell over, didn't it? And then we cashed out pretty much everything there. Moved our stop down, trailed the stop loss. You can do whatever you want. And if you're not sure on what to do, should I adjust my stop to break even? Yes. Should I trail my stop loss at certain levels? Can do. It's up to you if you want. I do that sometimes. Yeah. In terms of the nitty gritty, the detail, I leave that to you because you have to kind of make things work for you. I can give you a strategy and a template, but you need to be able to have some, be able to make your own decisions to a certain extent, and that's just how many pips you want to make, basically. What sort of percentage in profit do you want from the trades that you're taking? I can't tell you that. You have to decide that, right? But so yeah, it's cool. So the little bit, but you can always ping me a message and say, I'm not sure. What do you think? What have you done? And if you need ideas, and yeah, no problem. Some people prefer just to do it on their own and hide behind their screens and get up to all sorts of mischief. And then they'll come to me when they fucked it all up and said, "Oh, can you help me?" And then and it's always at like 10 or 11 o'clock at night I get these messages. I think you've had all day. It's like, no, all day you've been stuck staring at your charts all day, haven't you? You've been trading like a mad person, and you've lost loads of money, and you've dug yourself into a hole, and then I'm like your last resort as a go-to. You come whimpering to me at like some ungodly hour. And that's the life of a trader. That's reality, versus the Insta scammers that you see leaning up against their freshly wrapped, polished Lambo. And that's relatable, right? That's what you can relate to, I'm sure. So yeah, ping me. Don't be afraid. And don't send me an essay of a message. Send me a voice message and say that I'm not sure what to do here, or this is what I'm currently doing at the moment. What do you reckon? And then we can have a look at it together. But not too late at night, because my daily routine has gone out the window since the lockdown, and coming off from Christmas holidays, it's just I'm just trying to get back into things, the flow myself. Waking up at 5:30 and then falling asleep at 7:30 before the markets open, and then thinking, stuff like that. It's mad. But anyway, let's get back to this. Look, so my target with the divergent strategy is down here, back down to previous structure, 100%, 134.83. So we round it up, never round down, round up, 134.85, and that's the best target. If you want to be conservative still, note where it is, right? Note that level is just below the 135. So $1.35 is a nice institutional round number. It's a midpoint. We know that the reason I showed you when I zoomed out, I showed you the chart as a whole, as a bigger picture, was because you saw what happened at 134.83. It almost tested 135, didn't it? It almost got up there back in September, and people thought it was going to test 135, and it fell just short, because people will have taken some profit up there, as it was approaching that big fundamental round number. And it fell over, didn't it? It fell over and went all the way back down to like 120, into the 120s, massive move down. So it's an important number. So you go left on your charts to look at historical data to kind of gauge, the relevance of these levels and why we're talking about it. And these levels, historically, these levels are retested, aren't they? So you can appreciate that it's going to act as like a magnet, and expect price to drop down there maybe by tomorrow. We have non-farm payroll tomorrow. So we're looking for, with our divergence strategy, for this divergence to give us maybe a little bit more than this. So, another 50 pips from where it keeps getting to. So it's tested it once, it's tested it twice. Third time now, we're waiting for this third test, see what sort of test we get. So again, as a rule of thumb, people ask me, how do you get in, how do you get out, what should you look for? Look for something to be tested 3 times. We talk about that when we talk about trend lines as well. You're looking for something, a trend line to be validated. It needs at least 2 points of contact. And then the third point, you're looking for it to be tested properly, and at that point it's either going to break that trend line or it's going to reject that trend line and bounce off it. So the third time. So the same with this. It's going to either break this 135 50 area, or it's going to completely reject and just go back up and retest 137. And just because of this tight price action, I said earlier this morning, I said above $1.36 we are like bullish bias, maybe get up to 137, but below 136, maybe 135.80, because that's what I saw on the 1 hour as being an area of interest. Below 135.80 we are, or 136, around there, 20 pip range. We've still got further bias to the downside, further bearish bias. You can understand it, can't you? And this momentum indicator, which if we're using a momentum strategy, so we got this move down, bang, and then we've had the pullback. This is natural for a pound, fickle, and instead of just going in a nice neat straight line that you'd hope, it can do this. It can faff about, go down, you think it's going to go lower? No, bounce up, retrace 76.4. Go down, is it going to break? No, go back up, so got to be patient with it. But at the same time, if you understand what you're trading because you've studied that particular pair, you'll know that this is how it behaves. So understand the behaviour, and you can capitalise off this move. So you get money here, pulls back, short again, money here. This is what we've done. Comes back here, we've been shorting, scalping it so far to the downside, money here. And now we're just waiting. I want it to break, then we can really make some proper money. So if it does fail, then we'll short it down to 135, and that will be the divergence strategy played out in full. So that will be the divergence strategy. Now let's focus on the 76.4. So divergence is this, using the divergence with this awesome indicator. 3-wave divergence in this case, so 1, 2, 3, powerful. We like things in threes. We like support and resistance to be tested at least 3 times. 2 times to give you an awareness, to raise your awareness, to get your eyes looking at what's going on, and then you start stalking it, don't you? You start stalking the price action, looking for that third time, and that third time is where you can maybe make some money. So again, note it, put it as part of your trade plan. Say, okay, I'm looking for 3 tests of an area. It provides some discipline. Because then you see something test 3 times, and on the third attempt it breaks it. What do? Do you jump on it, or are you still sitting there looking because you haven't got it as part of your plan? But you kind of know in your head, or you kind of have a feeling because you're a trader. You have a feeling that this is going to do what you want it to do. But if you haven't got a strategy with some checklists, which is your vehicle to get to arrive at. To arrive in, I should say, in terms of making money, if you haven't got that nailed, then you're pretty screwed. So that's what strategy is. And so you tweak the strategy to make it work, because people keep asking me for like step 1, step 2. There are variables to consider. So you can't do it step one, step two. It can give you an overview and say, look, divergent strategy. Let's get up here. If it tests 137 round number, I'm interested. If it hits the 127.2 up here, I'm definitely interested, because that's the divergent strategy. We're looking for overbought and oversold. So people want to understand tops and bottoms for the perfect entry. Well, the divergent strategy is the one that does that. So you're not guessing tops and bottoms. You're taking a short at a key level. That's your divergent strategy. 127. If it gets to the 161, that's another area that I'm interested in up here. And I believe that pound will eventually get to 140, because we're now on our way up to test the pre-referendum levels, which were closer to $1.50. We were floating in the $1.40 mark to $1.50 mark when the referendum was announced back in June 2016, and then we had this massive sell-off. And I spoke about this on gold today. That's called an impulsive and corrective move. And when we had the announcement with the vaccine back in November, what happened to gold? It sold off like 1,500 pips in that day, because that was an impulsive move based on some unscheduled, unprecedented piece of news that nobody knew was going to be announced. So what happens? Well, gold is a safe haven, and they announced the vaccine. So, okay, let's take our profit off gold, because, you know, the world's going to be a better place in a few months. But, you know, that's the idea. But impulsive and corrective. Price has now been working its way back up, and as of yesterday, it went back up and retested the level that it sold off from, the 1960 level that it sold off from. So impulsive back in November, and then the corrective move all the way back up. So note things when you have historical things that are happening that are not scheduled, no matter how big or small. It could be like a terrorist attack, it could be anything. You know, in that moment, you're going to have an impulsive reaction to that, right? It's an impulsive move. The markets are going to react to something bad or something good. So at the same time, when we announced the vaccine, what happened to the stock markets? Well, the Dow spiked up to 30,000. So I was long on the Dow, and then shortly after I started shorting the hell out of gold and made our money. That's why we had such a solid, strong, record-breaking month in November, and it was my best month of the entire year because of this announcement. You know, it made things move, right? So that was the impulsive move. And you note, like with the Dow Jones, that's just sitting at 30,000. It hasn't really done much since before Christmas. So it had this massive move, and then what? It's only just made a decent move up yesterday to test 30,100. 31,000. So it's moved like 1,000 pips. But so this is the impulsive move and a corrective move. So I do believe, going back to the pound dollar, I believe that it's going to get back up to those pre-levels before the referendum, because nobody expected us to leave, didn't expect Brexit to happen. We thought we'd vote to remain in the EU, and it was a close call. But it was a shock to the system for a lot of people, right? And so that's why we had that impulsive move. Now we're in a corrective phase. And because it was such a big move and a big deal, I think if we didn't have COVID last year, we would have already made a decent retracement up to get up here to 140. I don't know, maybe not. But, you know, we had to go and stab down one more time before making the move up. But you can see it's well on its way to going up. So overall, higher time frames, we're looking for bullish momentum. But right now, for an intraday point of view, from a daily perspective, a weekly perspective, I'd like to see it test 135 at least one more time. You know, come down here, test this area, one spike down to maybe flush out all these people that are trying to go long, stop hunt, whatever you want to call it, liquidity grab. Come down here, test previous structure, and then go up, if that's going to be the case, and then go. So down first and then up, okay? So we can capitalise on this potential move down if it's going to continue, because there's plenty of scope for it to still do it. But in the meantime, we have taken profit, right? We've capitalised. So let's see if I can just move that up there. There we go. Sorry, I should have done that so you could actually see the pound. Right, let's minimise this, and let's focus on the smaller time frames. Let's look at the 1 hour on the pound, so we can focus on that 76.4 strategy. What platform do you place your trades, Alex? So I've got several accounts with different brokers. I use MT4, and I use another broker, and I use their professional account, and yeah, so various. I see markets generally. IC Markets and IG, they're my two favourites. Yeah, so this is a pound dollar on a 1 hour. Let's talk about that 76.4 764 strategy. Let's just scrunch it up a little bit. You don't necessarily need to see the numbers. I can shout the numbers out. I want you to focus on the price action and how it's flowing, and what we can expect to see over the next over the next hour or so. So we've had this swing up, which I think, if I was to plot again, if I was to plot my fib extension levels, let's just see. Every time you get a swing like this, get your fib extensions. Look at how it extended. What do I mean by that? Well, so you take your high. This was your high. Pretend that all of this hasn't happened. This is your high, and just look at how prices move. So this was the high, and then it pulled back to make a low, and then from this low it moved, didn't it? So we can say take the high, which is 0%, and this will be our low. Sorry, this is our low, which is the starting point for this move up. So this is 0% down here. This is your 100%. So we're looking at the retracement back up, and you can see, just by doing that, you can see where's the 127 at 136.71, and where did I short this on Monday? At 136.70. So where should my first target have been? Well, it should have been by rights, and I didn't actually plot. But for this swing, because we know markets breathe in, breathe out, breathe in, breathe out, I should have shorted it there at 136.70. I did call it as well, didn't I? I called it in the group, and I put the trade on, and I put the stop loss at 137.05. So we did go up one more time, because I understand that the pound is a fickle instrument. Instead of just going down, it has to go one more move up, and it came within 1 pip of stopping us out, didn't it? And then it dropped. Do you remember that? It was quite cool. Just adds to the drama, and then when it works out, you're sort of sitting there feeling quite chuffed with yourself, and it's all good. And that's what stop losses are for. So we got in here, but my target was quite conservative. I said, well, because I should have gotten in a little bit higher, or I was thinking I should have gotten in a little bit higher. On one of my accounts, I did get in the 80s. So I put my initial T1 at around 136.50, because I know this likes a 50 number. And I know that looking at all this price action, that's an area where it might just test and stall for some reason. But I should have actually put my target, been a little bit more generous with it. Should have made my T1 136.20. I should have done that, so could have had a nice 50 pips. I remember I did take some decent 40-50 pips off this first initial move anyway. I did bag some. I scaled out on several profit, and I know some people made some money on that as well. But you get why I'm saying that, right? So it's the price action. It comes back to retest. Did we have divergence? Well, no, we didn't have any divergence here, but we had our first wave of divergence up here. So it's justified. That was a divergence setup. Where would you put your stop loss? Well, your entry would be 136.70, but your stop loss would be wherever the highs are. So wherever this finishes faffing about, which is at 137.05 roughly. So it was justified. The stop loss was perfect. About 35 pips stop loss in the end. Risk to reward, well, you're looking for at least 50 pips to the downside. So it's about one and a bit, just over 1 to 1 risk to reward ratio. But that's just for my first target before I take some profit and move my stop loss to break even. And then what? We just see it go further down. Okay, great. So it went all the way down and hit my 200 EMA on the 1 hour. So I've got an EMA, exponential moving average. Use that as some support as well. Let's get rid of this. Let's just pull this back. So divergence strategy working in all sorts of magical ways, really. Different time frames, on different fibs being applied in different ways on different time frames, and giving you the same picture or giving you the same information, basically saying sell it up there, sell it, make some money, sell it, short it. So again, you can say that adds to the confluences, adds to your reasons. Does that all make sense to you so far? It's quite a bit to talk about, and some of it should stick. Watch the video again once it's finished recording. Go over it again. We're going to talk about the 76.4 now. I keep saying we are, but then we don't. Let's just pull this back. I'm going to pull that little bit back. I'm going to leave it on the chart. And yeah, just leave that there. So you can see it. Any questions? Just give me a yes or no. Did you understand some of it? And in terms of percentage, how much of it did you understand? 20% of it? 50% of it? 70% of it? All of it? None of it? You still there? Yeah. You can just type it if you want. Put it in the chat. Yeah, go on. Sorry, what did you say?
I understand your that.
You do, yeah.
I understand.
That's cool. That's all right. You can always ping me a message if you have questions. That's cool. No, thanks. Appreciate that. So you understand like 20% of it. Okay, someone understands about 20% of it. Yeah, you got to be honest, because then I don't know where to invest my time. Because if I want to share something and teach it with you, it could be that I'm not the best teacher, and maybe I'm not articulating it well enough, or maybe I end up going around the houses far too often before arriving at the answer. You know, I'm not very good at giving closed responses. If you ask me a question, I will most certainly give you an open response. You know, a closed response is simply yes or no, but my responses tend to be like a politician's response. We'll get there eventually, or not at all. At the end of it, a politician's spoken and he's still none the wiser. But he's made sure he's covered his arse. So I try not to do that. But yeah, there we go. So also note how I'm using the fibs. I'm using the fibs to track and stalk the one pair and do it off that and make your money. So you know, let's this is a 15-minute, and let's show you what price is doing. So to anyone who's unfamiliar, as a trader, unfamiliar with understanding fibs, all you'll see is price action going like this. Ooh, up and down, you know, no sense. There's no method to the madness. And then when you get these fib levels and you carve up this range, you start slicing this up into chunks like this, you start seeing the way that price is moving. Now, I haven't updated the bottom, the 100%, the 0%. I haven't updated it yet. I've left it as it is because, you know, yesterday, to be fair, we just teased this low, didn't we? We tested it twice, little double bottom. We didn't break it. Had we broken it, I would have updated it. But I thought I'd leave it until today to then give you a bit of a recap. Why are people coming and joining the group and then leaving? That irritates me a little bit, because I think, well, you know, stay, learn something. Unless you've got to have more pressing things to do, like put a trade on and scalp it for 5p. Yeah. Anyway, it's just me. I'm in a bit of a grouchy mood today, because I haven't been sleeping properly. It's been annoying. Trying to get back into a routine. For look at price action. It got up to the 61.8 during the Asian session, double top, and then we went up to here on Tuesday mid morning. We managed to get up there, didn't we? Around 10:45 London time. We put in a perfect retracement to the 76.4. And for anyone who studies or is aware of Elliott wave theory, you'll appreciate that this is the start of an Elliott wave. So wave 1 down here, wave 2 764 pullback, and your wave 3, you're looking for this to take out this low and go and just sell off and give us, this was actually a 160 pip move, so we apply it to here and do 160 pips from there and double it, so about 320. So we're looking for about 320, even if you're conservative, about 300 pip move from around 136.60. So if we said, 320 pips takes us down to about 133.40. That's why I said 133.50 area, because it likes a 50 number. So if we're going to apply that, we're looking for a much deeper sell-off, another 300 pips to go to the downside. So that's why my bearish bias is still here while we hover around 136, and that's why I'm still interested in shorting it. And that's why also I'm not too fussed about whether I miss this little move down or not, because I think if it's going to go down, we've got scope for this to actually go quite a bit to the downside. I know also that using my divergence strategy, we have to go back and retest the 100% where we broke out from, which hasn't really properly been tested as yet. Now when you scroll left on the chart, I know that it's been kind of bouncing around and it has gone down and tested a few times, but it hasn't done what I wanted it to do, which was go up, extend to the 127.2% level with divergence, and then sell off back down to the 100%. It hasn't actually done that play as clinically as I would have liked it to. So for me, it has yet to do it, which means that we still have the potential to see it happen. And we have all the makings for that to actually still happen. That strategy and that play is still it's still valid right now. So we're just going to be patient and wait. If it wants to do it, it'll do it. And it might do it tomorrow with non-farm payroll, or after non-farm payroll, maybe, or it might do it later. So we'll still see. But what I would say is, with the pound dollar, if it breaks this 76.4 area, then it's void, null and void. My bias to the downside will probably shift and probably start looking at bullish bias and start eyeing up the move, a strong move up to $1.40, to start going back up into 140 to retest pre-Brexit highs. They were the levels that we were at before Brexit. So the impulsive move, and we're in a corrective phase that's taken best part of 4 years so far, because we've had other things that have, one, that the politicians left it to the last hour to make some sort of deal after 4 years of procrastination. I mean, talk about take the piss. And then the second part was that we had COVID, so that's kind of put a certain spin on things, didn't it? Because suddenly we saw dollars, the dollar being affected quite dramatically with dollar strength. Everyone started buying the dollar up. 764 strategy. It's really simple. What do? Entry is at 76.4. Where's the stop loss go? Well, the stop loss will just allow price to do all this, allow price to faff around up here, and then wherever it's gone up to, wherever the high is, that's where you put your stop, just above there. So in this case, we'll use like a 15-minute chart or a 1 hour chart or a 5-minute chart to find the entry. And this high on this 15-minute time frame, the high was 136.71, which that's the high, 136.71. Now on Monday, that's where we shorted from to get money out of this move. So 764 just gave us another attempt to repeat the trade. Basically all we did was rinse, repeat. Kind of love trading. It's the same setup, but using a slightly different strategy, but the same sort of price action. Shorted here, made money, allowed price to consolidate on Tuesday, come up to 76.4. Oh, today, Monday was a divergent strategy that we're still in, still valid. Wednesday was a 764 strategy, doing exactly the same thing, just labelling it different, I guess, and taking it from here because, yeah. Please explain more on entries for the three strategies. Yeah, so 764 strategy is you allow price to get up to the 76.4, allow it to do what it needs to do. In this case, use a 15-minute time frame, a 1 hour time frame, a 5-minute time frame. Use all three time frames. Pay attention to what the price is doing. Note that this went up to 136.71, so my stop loss would be maybe above that by maybe a few pips. Doesn't have to be massively above. You can just tuck it in above there, maybe 3-4 pips. If your entry is at 1 36.66, all the sixes. Oh, that's freaky. Maybe get in at 65 if you're superstitious, and just short it there. Maybe have like a 10 pip. In this case, you could have gotten away with anything less than that 10 pip stop loss or less, and just watched it go down, and been amused at your risk to reward, because people love bragging about their risk to reward being like, 1 to a squillion. I risk 10 pips to make a million pips, and it's like woohoo. And then on my $10 account, which I made like 5 pence, or 5 cents. I'm taking a piss, but it's like, people put a lot of emphasis on the wrong thing sometimes. It's nice to see for definite. I won't I won't belittle celebrating success. If you have a win in this game, it's a win. I've got to have a laugh with it sometimes, because it's just funny what I see sometimes. Surely you look at stuff when people look at it and it makes you laugh. So it's on the 76.4 now. Yeah, on the dollar yen. Okay, that's cool. I'm just doing a recap and looking at potential further scope for the pound. Should it break this range and drop, then we're looking for 135, and then we're looking for 133.50. So there are your two targets. Entry here on the 764 strategy was at the 76.4. Two ways to play this. If you were taking a long, so say you thought, okay, pound dollar's done its move to the downside, my bias is still long, trading is subjective, so I'm still bullish bias, so I'm going to look at taking this back up. So you get in down here somewhere and you let it ride slowly, dragging its heels up, and it gets up to the 76.4. I do that. Sometimes I will, depending on the volume and what time of day it is, I will, maybe I would have got on in here if I was around for it, and taken it up to the 76.4. Or maybe on this pullback, maybe got along here to the 76.4 and said, okay, I'm going to keep going long because it's still going long. I'm going to keep scalping this long, get in at somewhere like 136.20 to 136.60. That would have given us like 40 pips, So you can buy up to the 76.4 as well. You don't have to wait for it to enter. And that's justifying using the 764 strategy. But I much prefer to see something like this, which is an Elliott wave potential setup. So wave 1, wave 2, pullback to 76.4%. Pay attention to what I'm saying as well. We're saying it's pulling back to a certain percentage. So we're saying something's moved by a certain percentage, and then we're saying it's going to retrace by a certain amount, a certain percentage. Pay attention to the percentages. For some reason, the 76.4% is quite a powerful level. We can go into why and who uses it and all the rest of it, but just note that 76% seems to be a really decent area to see a reversal. And we see this time and time and time again. So for me, I thought to myself, well, when the analysts were sending me information from banks like Credit Suisse, because I used to have friends that worked in Credit Suisse or for Credit Suisse, they used to send me daily reports or weekly reports and bits and pieces. It was always like, okay, whenever they did use fib levels, this area was always of interest. Why was it of interest? Well, the why is really interesting, or really simple rather. Why? Because we refer to this as the last outpost, the last move before retracing fully 100%. So I came up, as part of my checklist, I came up with the 3 option rule. The first option being that price is going to retrace 38.2%, 50%, 61.8%, or 76.4%. This being the last one. And that's the first option. So it's quite a lot to consider, quite a few variables. Is it going to react off 38? Well, yeah, it did here, didn't it? Look, it gives you a W shape. Sold off, went back, tested it, sold off, went back, tested it, third time, 3 tests. Then what did it do on the third test? Broke up, so that's why I say 3 tests. What did it go straight up to? Well, it went all the way up to 61.8 actually, didn't it? You see how these fibs are working quite nicely. Double top at 61.8, sold off. So fibs are being worked hard, worked well, price is reacting. It does look quite messy, but when you put fibs on your chart, see how price respects, gives it a lot of love, gives these fib levels a lot of love, a lot of respect, which is why I always say understand how to use fibs, and do put some fibs on your charts, and you'll be amazed at how price reacts at these levels and shows it some respect by hitting those levels and bouncing off it, just to basically say hello, yes, I've acknowledged that you're there, and giving you like a a high five. It's like high fiving it. It's like fist pumping those or elbow pumping in COVID times. These levels, these fib levels, they're being acknowledged, they're being appreciated. And if something is being used and respected, then it makes sense as a trader to adopt that tool and apply it and see how price is reacting at these key areas, key levels. And what we found was that the 76.4 was the last one. So as part of my first option rule, that was the last one. There's no excuses after that. I have to short from here. I have to short from here. If it does this, I'm short. If I was around for this, paying attention, I was out and about, so I missed it. But I got in down here. So I saw this move, didn't I, yesterday? Guys who joined me in the live room, literally within 5 minutes of joining the live room, we were like, right, we're short here at 136.09. We're just going straight in, and it drops straight away. Like, right, let's go. Sniper entry, no drawdown, bang. Because of this 764 strategy. So that's the simplicity of 764. I'm not looking for any indicators. I'm not really looking at anything else. I'm just looking at smaller time frames, like a 1 hour, 15 minute, 5 minute for the entry, and appreciate that we had this big move down. Now the second option, 3-option rule, second option is that it's going to fail here. We're going to take a small loss, insignificant loss. We only put half the house on this move instead of the entire house, so we've still got half to play with. Second option is that it's going to retrace fully. We're going to get a full 100% retrace. We're going to go back up and retest the previous high. That's the second option. So my 3-option rule is all we're doing really. All we're doing is we're just labeling price action, and we're giving it some relevance. And we're saying, okay, if making these assumptions, because it's speculation and probability. That's what trading is. So we're always making assumptions. We're saying if price respects the 76.4, we short it. What's our risk like? Well, it's nothing. We're just going to put a stop loss slightly above this bit of price action. Easy. Perfect entry. You want perfection in terms of an entry. You want a sniper entry. 764 is a good one for that. Perfect. You'll get something. Even if it moved a little bit like this and then you pulled your stop to break even and then it decided to go up, no harm done. You had a little go. This is what you're hoping for. You're hoping for a drop. But sometimes it might stall like this. It might acknowledge the 764, but it might just acknowledge it and not really respect it as much. It might just say, yeah, I know you're there, but I've got to get up to here because I've got more important things to do. I'm busy today. I've got to get up here. Sorry, I can't stop and chat. I've got to get up here and keep going. So we're making assumptions. Do you have time to stop here and then drop back down? Or as a living, breathing thing, markets are driven by human sentiment. So it's us that are guiding this and making things happen. What mood is everyone in today? Are you in the mood to short pound, or are you guys in the mood to take this long? What do you want to do with it? And that's how you have to think about it. Think about trading as a real life beast and respect it. So when you chart it, you just look at the high and low and chart it. You pretty much just take the range, identify that range, send me some charts, find your range, what you think is the range, the high and the low. Put some stuff on it like this, some fibs, and send it to me. Say, what do you think? And I'll tell you if it's right or wrong. That is what Mr. Frank, Foxy Frankie, Frankie Foxy Frank. That's what he's been doing, right? He's been sending me charts for the last few days at some ungodly hour. No, he's been very good, and he's got some really nice charts, really clean. He's put some text on there saying this is this, and this, and he's observing price action, and he's been doing some good stuff with it. And he seems to be grasping how to use how to use the fibs, how to understand this form of support and resistance, which is a very powerful form of support and resistance. So carve up your charts like this, put your 764 on it, look at how price reacts at that level, and you'll see time and time again this sort of thing happens. Boom. Bang. So yeah, there we go. So hopefully that helps you a little bit. If we do go up and we break long, then the third option to our 3-option rule, the third option will be that it goes up, breaks 100% and gives us an extension. So we'll be looking at 137.48. So it likes that 50 number. So 137.50 is the first upside target. If we do turn bullish on the pound dollar, 137.50 we'll be looking at. 137 and then 137.50. It might get here to 137 and it might just do that. Take ages to get up there. Okay, I'll leave it there. I'll stop sharing. Hopefully that's enough for you guys to take on board, because otherwise it goes on for too long. What do you think? Any questions? Any questions? Yeah. Uh-huh. Yeah, quick. Mm. Yeah, so same principle with regards to the 764 strategy. Same thing really. You can sort of say, like here, let's look at the 61.8, how it reacted. It went up here. You could have sold it off there, and then tucked your stop at break even. And it didn't want to do it. It done this fickle move. It was deliberate. See that? Because it knew 618's there. It's gone up and retested, didn't it? But it didn't just retest. It had to do some sort of 15 minutes of madness just to stop hunt, just to stab up, maybe liquidity grab, maybe suck in some buyers thinking that this was going to go up, and then it dropped. So it's hard. It's not an exact science. That's trading for you. Price wants to be a bastard sometimes. It will do that. Depends the pair you trade. That's why it's good to do something like trade the Aussie dollar or the New Zealand dollar. They're a little less. They're a little less crazy. They don't do this. Pound dollar does this. Somebody said to me yesterday, I think it was David, said, it's the first time I've come in and made some money straight away from the off on the pound dollar. It's like I never win on a pound dollar. You don't really understand the price action and how fickle and annoying it can be and deliberate, and it does this sort of thing. Instead of just going down, it had to do this. Let's go up, stop you out, and then go down. So, you might get stopped at break even, only then to see it drop. But if you're a proactive trader and you think, I think it is going to drop down, I'll get in again. I'll have one more stab at this. Sometimes you might have to do that. You might get stopped on the first attempt. You might have to have another go. Do limit yourself in terms of how many attempts you take. But yeah, it's not an exact science, and unfortunately you might have to do that. You could put a generic 20 pip stop loss on it, or you could put your stop loss at 764 above there. But then I'm thinking to myself, if I'm shorting at 61.8 on a double top, I don't want to put my stop up here, because I might as well take a long then. If I want to put my stop up here, I might as well go long to the 764 and apply my 764 strategy. So that's why I didn't create a 38.2 strategy or a 50 strategy or a 618 strategy. That's why I developed the 764 strategy. So I was trying to do away with this noise, and say, okay, look, if we do manage to stretch like an elastic band, if we do manage to get this far up here, then I'll be more inclined to take a sell-off, because it will have had enough time to retrace and grab some liquidity. It will have had enough time to pump up by the time it gets up here. And we've been really patient not to short here, not to short here, not to short here. We've sat on our hands, and once it gets to here, I'm going to take a short up here. Yeah, that makes sense, doesn't it? But at the same time, if you're a little bit more aggressive and using the fibs, you can use the fibs for your mark up here, mark up here, mark up here. Or you could say, all right, I'm going long. I want to take a long. If it breaks 38.2, I want to take a long. So you can play it either way, both ways. 3 times testing at 38.2. If it breaks the 38.2, if it breaks this 200 EMA, if it breaks this bit of resistance, I'm going to go long. You see, it broke it, broke it and pumped up. Went from 38.2 to 61.8. And how many pips was that? That was about 40 pips. So you can have a little play around with these fibs. They give you so much opportunity to take trades in both directions. They give you so much scope to understand what's going on. But if you want to be clear cut and very disciplined and just be patient and say, okay, I will take a little bit here. Maybe I'll have a go shorting it. I might short it at 50 or 61.8, or I might try and go long to the 764. But when it gets to the 764, I'm going to short it. No matter what I do in the meantime, boredom trading, I'll stick a quid on it, whatever. Can't wait because I've got nothing else to do because I'm in lockdown 7.0 and we're on tier 50 and I can't look out the window and I've got nothing else to do. So you're going to be tempted to stare at your chart and you're going to see this stuff happening. You're going to be like, right, I might be able to monetize it, and you can. There's nothing wrong with that. It hits here, sell it, make some money. Hits here, sell it again, double top, make some money. Goes here, test it. I think, all right, I won't short it this time. I'm going to wait and see. Breaks it. All right, I'm going to go long on that break. Make some money long. Bang, done. Make money there. 1, 2, 3. 3 times I've made money over a period of like several hours on Tuesday morning with the London session. That's what these guys have done. Like when you see the videos of certain traders out there where they share I've flipped 5k into 50k and 100k sections. Like, yeah, I'm on a short here, 1, 2. They've been very active. You look at how many trades they've taken. It's like I've taken a lot of trades to get to before it gets to here. Or you can be a little bit more calm and wait for that. So trading is subjective, and that's what we mean when we say trading is subjective, because you have to wait, either be really patient and wait for it to get up here, otherwise you won't take a trade. Or you might take some there or there or there. You see, it's all fun and games. Have a go. You are having a go. You're not just shooting from the hip. You're having a proper go using structure. You're applying the structure to your chart. These fib levels are structure, support and resistance levels, and you're buying and selling off those levels. Nothing wrong with that. Make some money. You know where to put your stops behind where you're entering. Because you're hypothesizing, you're basically speculating and saying, right, I think in this case it's going to break 38.2. I'm going to take a long at 136, a round number. I'm going to go long here, the break of 136, the break of this, third time testing this area. It's actually the fourth time if you're looking at a 15-minute chart. And I'm going to go long. I'm going to take it long, and I'm going to tuck my stop up here somewhere. And I'm going to bring it to break even, and it goes 1, 2, 3, so 15, 30, 45, 45 minutes to an hour, we made our money, and it was very nice. So you can do that as well. Have a go. And which time frame you should put fib levels if you want to trade 15-minute time frame. So trade, put fib levels like I've done here on the 15-minute chart, but also have them on the higher time frames as well. But have a look at the, come try and join these live sessions on time. If you miss it, go and look at the recording and see what I've done. And you'll see different time frames being used for different ranges. No questions. I will look into divergent strategy. So much to learn. Audio was a little sketchy, but you're making sense, so I appreciate it. I have no idea why this is set on private. Zoom is different tonight. Thanks for taking time to do this for everyone. No problem. Share the love. Share the wealth. Hopefully that makes sense to some people. Go over it again. If you have any questions, please message me on Telegram. All right. Thanks very much, everyone, for your time. I will keep you updated if there's any setups or trade setting up with the US session. I'll share them for you, okay? Any live trade calls. Right, thanks very much. Bye for now.